Today, Bitcoin briefly bounces back above $72,000 to kick off the week. Ripple's CEO predicts the entire value of the crypto market will double this year, and BitGo's Matthew Ballensweig explains the recent landmark moment for crypto. Welcome to CNBC's Crypto World. I'm Brandon Gomez. Crypto prices in the green to kick off the week, with Bitcoin trading briefly above $72,000 this morning. As of noon Eastern, the cryptocurrency traded above $71,000. Ether climbed 7% to $3,629, and Ripple's native XRP token rose more than 3%. Crypto-focused stocks followed Bitcoin's momentum after the cryptocurrency broke through $72,000 for the first time since mid-March. As of noon, Coinbase climbed more than 6%, and MicroStrategy jumped nearly 8%. Okay, let's talk about the top stories. Ripple CEO Brad Garlinghouse forecasts that the crypto market will double in size, hitting $5 trillion by the end of 2024. Speaking with CNBC, Garlinghouse cited factors including the upcoming Bitcoin halving and the arrival of the first US spot Bitcoin ETFs, which he said is driving real institutional money. One of the other factors that Garlinghouse sees pushing the crypto market to new highs is the possibility of more regulatory clarity in the US. Under the leadership of Gary Gensler, the SEC has been aggressive in its enforcement on crypto companies, including Ripple. The agency sued the crypto company back in December of 2020, alleging it illegally sold XRP in unregistered securities deals. Ripple denies that claim and is fighting the suit. But remember, 2024 is an election year, so crypto hopefuls are optimistic that the next administration will be more accommodating to the industry. Now, Garlinghouse isn't the only crypto bull predicting outsized gains for the crypto market in 2024. Gemini's chief operating officer recently told CNBC that he expects Bitcoin's price to rise to $150,000 later this year. Next, a Manhattan jury found Terraform Labs and its co-founder Do Kwon liable on civil fraud charges brought by the SEC. That's according to a statement from the agency on Friday, which noted that the decision came after a 9-day trial. The agency's Division of Enforcement director said in a statement that the company and Do Kwon, quote, deceived investors about the stability of the crypto asset security and so-called algorithmic stablecoin Terra USD, among other things, and that those deceptions led to devastating losses for investors. The SEC estimates that investors lost more than $40 billion when the Terra USD depegged from the US dollar in May of 2022. We reached out to Terraform Labs for comment on the verdict, and a spokesperson told us that the company is currently weighing its next steps and maintains that the SEC does not have the legal authority to bring this case at all. Do Kwon was not at the trial since his extradition battle is still happening in the background. He is currently being held in Montenegro, but both the US and his native country, South Korea, have sought his extradition on criminal charges. A detained Binance executive pleaded not guilty to money laundering charges in Nigeria today. That's according to a local news outlet which reported that Binance's head of financial crime compliance, Tigran Gambaryan, was put behind bars pending trial. CoinDesk is reporting that the development came even though Binance said he had no decision-making authority at the company. The presiding judge, however, reportedly ruled that under Nigerian law, he can still be considered a representative of the firm. Gambaryan was detained in February along with a Binance colleague amid accusations by Nigeria's government that the crypto exchange had helped process illegal funds worth billions of dollars, and that it had manipulated the exchange rate for the country's currency. All right, back to the markets for our main story. Late last week, Crypto World's Tanea McKeel spoke with BitGo's Matthew Ballensweig, who is the head of the Go network, about what's currently driving prices. He also explains what he believes is the, quote, defining moment for Bitcoin.
You know, I feel like since the beginning of the year with the launch of ETFs, the approval and the launch of ETFs, we've just been talking so much about ETFs. So, you know, a quarter into the year, is this still all about the ETFs?
Yeah, thanks so much for having me on tonight. Great to see you as always. I think, what's driving the market right now starts with the ETFs. I think the ETFs was, obviously this was back in January, but this was really the moment that I think the entire institutional part of crypto has been waiting for a half a decade. This was the defining moment, I think, of Bitcoin, at least, right? In this era of its history. Like, this was its kind of IPO-like moment. So I do think that, it all starts there, right? And what does that mean? I think it's Pandora's box is now open for institutional adoption of the asset class. And that really goes a long way. And you can really see it, right, in the flows. If you just look, we're now on day like 58 or 59 of trading for these ETFs. And we've seen $12.5 billion of net new inflows come into the asset class. That is a meaningful amount of new Bitcoin, purchasing, and that is net of, right, the capital that left the Grayscale, GBTC fund as well. So if you just look across the ETFs, we're now sitting on $55 billion worth of Bitcoin in those ETFs in the first 2.5 months of trading. Like, that is record-setting flow. So clearly there's demand here. I think it all starts with that. That being said, there's other things that are going on as well that kind of jive with this narrative of institutional adoption, which is something that, again, like we've talked about for a long time, but it's really starting to manifest now. You look at BlackRock, for example, they recently launched their tokenized money market fund on Ethereum. That is another landmark moment. If we didn't have the ETFs, that alone would be a massive kind of narrative in its own right. Just the fact that you have one of the largest asset managers on the planet engaging with the Ethereum native blockchain and actually launching a tokenized money market fund in partnership with folks like Securitize and BitGo and Coinbase. So really exciting things, I think, on the institutional front. We're starting to have conversations on the ground with, some of the largest venture funds in the world, asset managers, even pensions and endowments, about how to step into the space, right? We're having conversations around things that we didn't a year and a half ago, like regulated custody, the separation of custody and trading, market access and financing, tri-party collateral management. So I think the appetite is starting to become real, and now it's moved from speculation to how do I get involved and who am I going to get involved with? So I do think, the institutional narrative is driving a lot of the longer term kind of price appreciation here. That being said, there's a lot of things going on kind of at the micro level as well, but I think that is the biggest theme here at play.
I want to go back to ETFs for a second and talk a little bit about BitGo itself. So how have these new funds from this year, how do they fit into your business so far? BitGo is a major custodian for some of the issuers, and you made the point before we spoke that this idea of a 60-40 portfolio split has kind of become outdated. So talk about where you think these ETFs fit into a portfolio and, what you're hearing in terms of, what people think about how they should allocate to this asset class.
Yeah, definitely. So I think, obviously now that there's 9 new ETF issuers in the market, it just creates a much wider ability for institutions to get exposure to the asset class. So now that that's happened, the question is, where does crypto actually fall on the efficient frontier? If I'm a big hedge fund, or if I'm a pension or endowment or sovereign, I'm thinking about how does Bitcoin play into my overall mandate? What's the right level of exposure? And then how do I actually express those bets and take the exposure that I want? So, those are really important questions that I think folks are now asking themselves for the first time. But that is, I think, why you're seeing a lot of demand come into the ETFs, is because it does fall somewhere, right, on the efficient frontier in some of these institutional portfolios. BitGo's role in this, I think, one, it's really multifaceted. On one side, right, we have relationships with a handful of the new ETF issuers from a custody perspective. So, BitGo is one of the largest custodians, digital asset custodians in the world. We have won, business of 2 of the new ETFs, and we're in conversations with many more to basically custody the underlying Bitcoin of that ETF. We do it through our South Dakota State Trust Chartered entity, which is BitGo Trust. It's been around for a long time. We've really built our business on providing kind of the ability for folks to safeguard assets inside of our bankruptcy remote entity. And so that's why we see a lot of the ETFs starting to now talk to and utilize BitGo for its custody services. And the other thing that we've built is something called Go Network, where not only can ETFs, leave BTC at BitGo under custody, but as they're interacting with authorized participants or market makers that are actually making markets in the underlying Bitcoin, we've been able to facilitate the instant transfer of assets like cash and USDC for assets like Bitcoin seamlessly, all inside the walls of a regulated custodian. So, I think those 2 products together is why we're starting to see a lot of the business come to BitGo's way. So that's kind of, how we're interacting with the ETF issuers. And then obviously we're interacting with those that are buying Bitcoin through the ETFs, such as hedge funds and VCs and others that also want to, try and figure out, right, how to utilize BitGo services on the prime side, whether it's borrow, lend, trading, custody. So we see it kind of from all angles.
It's been a little more than a year since the closure of Signature and Silvergate banks. And we actually talked to Custodia Bank recently and asked them how they're trying to fill in the gaps left by the removal of those banks from the ecosystem. But the Go network seems structured to also provide a similar level of liquidity for digital asset operators. I don't know if I'm mistaken actually in thinking that the Go network might have been launched in response to what was going on at the time. But in any case, I am wondering how your business has shifted in the year or so since then, and if it's caused an increase in customers for the Go network.
Yeah, it's a great question and a great point. I think, after the collapse of, Silvergate and Signature, it really hindered institutions' ability to move dollars around the ecosystem in a way that was, right, 24/7, 365 efficient. Coming out of that, we said we need to solve this problem. And so we created Go Network. And you could think of Go Network really as a classic replacement for Silvergate and Signature, and that you can move dollars, you can keep dollars in our qualified custodian, you can move them instantly to anybody else on our network. And then not only does Go Network support the USD side, but it also supports the digital asset side as well, which is really novel. So not only can you send dollars to anybody on the network, you could send USDC, you could send yield-bearing assets, you could send crypto. So you can imagine what that does in terms of just a capital efficiency perspective. And then all within the walls of a qualified custodian. So we've definitely seen a lot of traction with Go Network to solve some of these problems. We're definitely seeing a lot of inflows of USD specifically into BitGo for the purposes of just seamless transfer across the ecosystem. We've done over, really $1.5 billion in terms of transaction volume, I'd say, in the last couple months. We've onboarded over, 350 different counterparties to Go Network. So definitely starting to see it take form. And our bet obviously is that it continues to just really catalyze the velocity of movements in the ecosystem, and we obviously see ourselves as a nexus in some of those institutional flows.
All right, that does it for Crypto World today. We'll be back again tomorrow, and we'll see you then.